Hi to everybody, and welcome back from the break. We will make I think, a little bit of a change now. We go from the bits and the byte now to the real world, the physical world. But I also think that if you ask a lot of investment thematics, that our energy crisis and maybe we need to rebuild our physical world a little bit. I know you play a little bit part of that, and maybe very interesting to hear from you. You're very exposed to the mining, the construction, and everything that there's also a lot of thematics about. So welcome to you, Tom and Anne, and heavy high-tech working lights for heavy vehicle is your company, but I will let you tell much more, Tom. So I hand the call over to you.
Thank you, Michael. It's a pleasure to get the opportunity to introduce you to Nordic Lights and our business. We make lights for heavy-duty equipment, and we will go deeper into our business and our company in this presentation. We would like to start to introduce ourselves. My name is Tom Nordström. I'm the CEO of Nordic Lights since 7 years ago.
And my name is Ann-Louise Brännback, and I'm the CFO for Nordic Lights and have been so now for 3 years.
Our mission is to provide visibility for operating work machines. That is necessary to be able to guarantee a safe operation. And on the pictures, you can see some typical examples where our lights are installed. Excavators from the left picture to agricultural equipment and forestry, but we also do other applications like mining and so on. We have a vision to be the leading company in our business, to be the best, who are the first one with new innovations and can supply premium equipment and the visibility to our customers. Nordic Light, in brief, we are a focused supplier. We focus on a specific market, which is heavy-duty equipment and lights. It's a mission-critical equipment to be able to operate the machines in dark conditions. We are global, active globally. We have factories in Finland and China. We have sales offices around the world to be able to support our customers all over the world. We did last year 66 million euro in turnover with an adjusted EBITDA level of 8.9 million, over 400 customers from large ones to smaller ones, and approximately 300 employees. So between 2016 and 2022, we have increased our market shares from 3% to 8%. Ann-Louise will go deeper into our financial numbers and development later on in this presentation. We work with 5 end-user segments, and which is mining, construction, agricultural, forestry, and material handling. We work both with OEM customers, meaning the manufacturers of the work machines. So OEM business is where we supply a component which will be all installed when producing the work machine. We do also work with the aftermarket through distributors, so that also part of our business. The more machines on the market with our lights, the bigger will the aftermarket be. People learn to know us, and our products are sold also as an original spare parts. Some well-known OEM brands who we are collaborating with and who have been our customers for over 20 years. Some of them over 20 years are mentioned here, like Caterpillar, Hitachi, John Deere, Komatsu, Liebherr, Pons, and Sandvik. So OEM customers from all over the world. Some long-term underlying growth drivers I would like to mention, who has been supporting our growth journey, are explained in the next page. The market for heavy-duty equipment has had a growth for a long time and is expected to continue also for the next 5 years. Some external companies who have done market studies is expecting 4-5% growth for also in the future. What is driving that is the need for developing the infrastructure and urbanization. That is expected to continue and also in the future. What is even more important is the awareness of safety, which is pushing also the users and the manufacturers to install more lights on every work machine. That is at the same time also improving the efficiency when using the work machine. So it will also improve the productivity for the end user. So safety and safe operation in this case goes hand in hand also with the economy or the let's say the income the owner of the work machine can get from doing the work, making the job. Autonomous vehicles is something new that is expected to come also for work machines. First thought could be that for autonomous vehicles you don't need any lights, but the reality is that the videos used to control an autonomous vehicles in dark conditions need better and more lights than the eye of a human being. The third one is the technology shift from halogen lights to LED technology. All of you have seen that happening in your home and in cities, but also for vehicles and machines, this technology shift is happening right now. There are still halogen used and installed on new machines, and this is going to change the next few years as well. LED lights are more expensive, so that has an impact also on the value of the market. Smart lights and smarter solutions. All of you are driving passenger cars. Modern passenger cars are used to that with more intelligence, adaptive lights. This is also coming, and we are working right now with some of our OEM customers to develop new smart solutions. And with the LEDs, you get also a more energy efficient solution, reducing fuel consumption, which is good for the environment. So this is also driving the change to LED lights. Over to Anne-Louise and the financials.
Thank you, Tom. So Nordic Lights is a growth company with good profitability. We had a net sales growth of 52% in 21, and we had a growth of 45% in H1 this year. And the growth is based on our broad global customer base and the possibility to increase the share of wallet with them. We also have new business in ramp up, and there has been a favorable underlying market demand in 21 and also in H1 22. We expect to have a growth of 20 to 25% for the full year 22. Our gross margin has historically been on the average level of 37%. That was also the case for H1 last year. But then in H2, we were hit by the global supply chain challenges with spot purchases, high component prices, high freight costs. And that impacted negatively our gross margin in H2 last year. and took the full year down. We have taken mitigation actions and are back to good levels again. We had 34% gross margin in H1 this year. Adjusted EBITDA margin in H1 this year was 16.8%, so a very strong result. And we are really back on good margin levels. The good volume increase in combination with our improved gross margin made this possible. So to summarize, Nordic Lights has strong growth and are back to good profitability levels. Let's take the next one. We have a balanced business portfolio, both regionally and by industries. In H1 this year, we had growth in all regions, but especially strong in Europe and in North America. We also had a strong growth in all end industries, but especially in agri. We have known business in ramp up, and that will further balance the business portfolio and make us even more resilient. And back to you, Tom.
Thank you. Let's go back to the market and our position in the market. Our core addressable market, meaning the 5 end user segments we are focusing on, has a value of approximately 1 billion euro. And we have an 8% market share approximately. So there's still a good opportunity to grow further in our core addressable market. In addition to that, we see good possibility to expand to adjacent end user segments. I mentioned the 5 of them, and some examples of adjacent segments where we sell something, but it has not been a focus area is, for instance, emergency vehicles, marine and ports, offshore, and so on. So a lot of further opportunities to grow for us. What is important to highlight is also the resilience this gives us, because we are well established among many of the global suppliers who have been there for more than 100 years. We have up to 30 years history together with them, so it's a very sticky relationship and long term. The work machines have usually a very long life cycle, meaning that as long as a specific model of a work machine is in production, we usually have the business for the whole lifetime. That can be up to 10-15 years, and after that we can still supply spare parts. The different end user segments and our geographical coverage means also is strengthening the resilience, because the cyclicality that is there, of course, is usually not in the same phase depending on the end user segment and the geographical area. So this balanced portfolio gives us a strong position and a resilient business. We have a very diverse customer base also, as mentioned, from small to big customers and mid-sized. And the winning new business and gaining new business is usually a 2 up to 4 year process. So we know well what we have new business which is in ramp up to come in the future. And this is what Ann-Louise also highlighted from 2020 and 2021, that we had a lot of new business that kicked in. The market outlook, the external research is expecting the next 3 years to remain on a high level. The demand will remain on a high level for work machines in almost the whole world. Even though the current macroeconomic uncertainty is there, there have been some disturbance from component shortages during 2021 and also 22. Nordic Lights has managed very well during 22 and have not suffered a lot from it. Some of our customers have been able to postpone some of their production, so they have for short term, in the beginning of 23, they have good order books, which also is a signal for a stable business for us. The heavy, this is what I mentioned, that the heavy duty equipment manufacturers have bigger problems to meet the demand. As said, the third party research is forecasting strong demand also for the coming 2-3 years. To summarize, mid and long-term targets and plans for Nordic Lights, our guidance here is a growth annually over 10% in average for our revenue, and that is organic growth. Profitability level for EBITDA to be above 18%. And the dividend policy is to pay out 30 to 40% of the net profit, adjusted for the amortization of goodwill. Net debt EBITDA ratio to be below 2, and at the end of first half this year we were at 1.8, and that was before the capital we received from the listing process we did in July this year. In November, we updated our guidance for this year and increased it from 15 to minimum 20. So the range is now 20 to 25% sales growth, organic sales growth for this year. At the end, to summarize some of our strengths, why we have succeeded to deliver this kind of result, is the position we have in the market and our brand. It's well known in our business. All OEM customers, they at least the global ones, they know us very well. Most of them already work with us. In addition to the global ones, we have a broad range of smaller and mid-size, giving a better resilience, as well as the aftermarket. We have a global operation to support our customers worldwide and support the business. Strong technology know-how, R&D, and being in the front line with the new technology is key for us. We have been one of the first to always introduce new technology, and the clear ESG objectives in our business, where we put the focus on safety and energy efficient solutions. We have good performance indicators from 20 years back of growth and profitability, and a lot of additional opportunities to grow further, and a strong professional personnel with know-how, who knows the business and knows and understands our customers. So this is where I want to stop, and thank you very much, and we are happy to take some questions as well.
Perfect. The first one is, you actually alluded to that they expect that the heavy vehicle will grow, and we are also talking a lot about a recession. Which end market do you expect continue growing even in a recession?
Actually, I didn't say that it will grow short term. I say that it will remain on a high level, because historically, the last we have had historically we are now on a really high level, and it's highest ever, and it's no one will expect that the market as such will have a growth percentages as much as 2 years ago, but it will remain there even though there's some uncertainty in the market.
And you also touched a little bit upon the aftermarket. That might be a way to go if the new build market settles a little bit in. Do you have the setup to catch that market? I guess the aftermarket, you need a much bigger distribution power to do that. So do you have the setup right now to catch up in the aftermarket and maybe growing more there?
Yes, it's correct. And aftermarket is balancing also the OEM business quite well for us, and that's why we focus also to grow the aftermarket even further. Part of the distribution to the aftermarket goes through the distribution network of the OEMs. They supply the original spare parts. But in addition to that, we have also independent distributors, and we are continuously working also to expand that network of distributors to be able to cover the aftermarket and make our products available to the end users.
And then there's a special, I think we're hearing from more and more companies that the electronic components, which you must have some part of besides metal, is actually dropping in cost. You don't need to go to the spot market. It is dropping in price. How is that affecting your gross margins expectation or your expectations for the margin going onwards, that we might maybe see some easing on the supply chain situation?
Yeah, you actually see it already in the numbers Anne-Louise showed.
Okay.
We were hit the most by the shortage of electronic components in the second half of 21. And that was also when our profit dropped, because we had to spend a lot of additional money to source from the spot market. On top of that, we had increase in freight costs. But as Anne-Louise highlighted, we are back on track with the profitability, as you could see from 2022 and the first half numbers, which we have disclosed here.
So there's not a positive effect maybe going into 23 still, it's coming more down. If you look at the freight cost, I think it has been a steep curve down in the second half also.
Yes, we expect to really, the shipping from Asia, for instance, has come down significantly the last 2-3 months. And the effect of that we will see in 23, because there's also a slight delay there with how it is impacted in the business.
And then always going a little bit up in the helicopter, we always hear that when we are in the production side, Europeans competing on price and some stuff, and I see you have production all over the world. What is the secret sauce, to your success? Is that because you are in the heavy equipment work and work that it works and it holds? Is that your secret sauce? That's why you have those OEM deals with Caterpillar and all that?
There's no, let's say, single explanation to that. It's a combination of the whole value chain, from how we are designing the product. That's usually where it starts. Smart design, smart solution in how we have developed the products. We have own know-how and do in-house electronics, optics, and mechanical design to choose the right components, which are cost efficient, through how we are sourcing and collaborating with the right suppliers who can also be cost efficient. Our own assembly, we have invested in automation to be very cost efficient and in our production. To know the customers in our sales and product support, we understand what is important for our OEM customers as well as the end users, to understand what is important when operating the machines. We are doing a lot of simulation to support them how to choose the best light solution, where to position them on the vehicles. We can show them with animations that what is the result of it. So when they make the decision what light solution to choose, they can be sure that what they get 1 or 2 years later when they have the machines in production is actually what they wanted to have, because the simulations we can give to them are very realistic.
Thank you, Tom. I think we got a lot of way around your competitive strength, so let's end there, and the time has also run out. So thank you to you, Tom and Anne, for taking us through your company.
Thank you.